5th July. Okay, it's Wednesday. So today, name given trading range day. Okay, so let's go for a brief general review. Today is the trading range day. Okay, so overall channel is for downside. Okay, if you see lower low patterns are forming at midpoint. Price also stay above, sorry, below moving average, and again lower low patterns are forming. Okay, so if you see from swing trade opportunity, so this is the wage pattern. If you sold anywhere or below this bar, bear bar, so we can consider it for swing trading. Okay, this is also another opportunity. From midpoint, it rejected price to go up or stay above moving average. Okay. So if anybody sold here after seeing this pullback, which is not have strengthened, so again go scale in here, can exit here. Okay, this is also sort of move in this expanding triangle. If you see, every leg is increasing and increasing. If you see, this is the second leg of downside. So this is the upside leg, which have two legs. This is the first leg. This is somewhere here, second leg, and then again brought down price to the bottom of the channel. Okay, if you see, so here is the also good swing opportunity. If you consider idea of breakout fading, okay, so every breakout you are fading, then this is the major breakout fading. You can scalp here. Okay, this is also another example. Breakout attempted to this level. Okay, and then form bull bar. You can buy here. Okay, you can buy any of these bull bar, considering price will go to the midpoint. Okay, and eventually my price broke above the all the ranges. Okay, high closing around high of the day. If you see, starting two bars are also big bars. So considering of fading approach, so you can put your stop order below this two trading range sidebars. Okay, so this is also good opportunity. If you see breakout to the this first bar. Okay, this uh, if anyone bought here considering fading approach, so uh, not good, but scalp and profit scenario. This is also breakout to this second low. Okay, the buyers also have bought here. So anyone bought here or even these three, any of three bull bars, they can scale in here. Okay, just manage well. Exit on second position with profit. First on break even. Okay. This is the wage pattern. If you can see, okay, so you can put buy order. This is also pattern, flag pattern to this bull leg. Okay, 4 consecutive bars. So this pullback is not very have strength because of this third bull bar in very consecutive after consecutive 2 bear bars. Okay, so you can also buy here, or if you have bought here anyway, so you can buy here. Okay, exit somewhere here midpoint, because your approach is for only scalp. Okay, in this type of range day. Okay, here is the first bear bar. Bar is body have more size, but if you see in another chart, this is the sort of doji candle. So for if first bar is sort of doji bar, so no any direction uh, buyers or sellers interested. So price form two-sided moves. Okay, so both sides you can trade. Okay, what you can do is just thought for uh, buy at low. Okay, this is the scenario. Buy at low and sell at high. Okay, this is the lower point of buying opportunity. Okay, so if you see, I will show you, and this is the bear channel. you can also sell somewhere here, considering sell also somewhere here. Okay, this is also another, this pullback is also good approach for scalping. This is the great scalp concept. uh, 25-30 point scalp here. If you bought this breakout considering fading approach, because 1 2 3 4 5, this is the fifth layer in today's range. So anyone bought somewhere here, so this is also 50-60 point upside move. Okay, you just have to participate at anywhere considering good. Okay, a lower and upper channel. Let's go for bar by bar reviews. Okay, we will go from uh, daily time frame for weekly approach. So if you see the last week we closed above all-time high. Okay, so Friday, which were closed here somewhere here, we are still trading above the week's high. Okay, so probably uh, after bear bars we can see bears move. Okay, selling approach. Still price forming is upside. Okay, so this is the two-sided move in last 2 days. This is Tuesday's pattern, Wednesday's bar. Okay, uh, let's go for hourly time frame. So this breakout mode is somewhere posed here. Okay, we can also say this breakout mode is ended here. Okay, we can try for pullback and then continue to make channel or form second leg. Okay, you see. Okay, in 4 hour time frame this is considered as a pause mode. If you see second bar in 4 hour time frame today, it shows bull bar. So probability of going upside is for higher. Okay, we can consider for tomorrow approach for going upside. Okay, if we trade above this bull bar, if you see anywhere here, this is the consecutive 5 bear bars. uh, this bull bar consider as a uh, this pullback ended. Okay, and we continued to buy here. If you see, this is also same scenario, this fourth bull bar, second bull bar, then buying continue. So same approach can be traded here as well. We go for, this is the consider as a pause mode. We still go for high. Okay, and create channel. Let's go for 5 minute. Yesterday also big, we can say range day, and I gave name as a bear move. Okay, I already explained many videos. If you see, this is also bear buying day. Okay, another video is also there. There is a lot of video are there for same trading pattern. Okay, if you see, this is also same pattern. This is 20th June. Okay, first half is a bear day. Okay, first 2 hours, and then we are continuing towards high of the day. So I gave name, it's a bear buying day. You make sure to watch video. I have also in end videos explain many patterns. Same how you can unfold the patterns. Okay, here is also 27th June. If you see, uh, this is not the chart. This is it. This is also starting wedge pattern and buying continue. Okay, you make sure go and watch 27th June, also same day structure. Okay, so this is also 4th July, yesterday's pattern is also same, that bear first hour move, they got measured move. If you see, yeah, this is fifth candle which is considered a breakout. So even whoever enter on fifth bar, beer bar, so they can get profit. Okay. Also, there is uh, another scenario is that whoever sold here, okay, considering this is the Monday start, whoever sold here, they are in profit. Now, if you anyone sold here or even this bar and thought for holding for next day, okay, so what they can do, they can go again scaling at this point. Okay, if you see, I considering extreme point, so this is the point. So they can exit this position at break even, okay, and this position at profit scenario. This is also one scenario to look at it. So buying channel continued in second half after 2 o'clock, around 2 o'clock. We seen as deep pullback. They have two legs. Okay, we much not shown upside move. This is the considered as a flag pattern. So downside move is resumption. We can also consider for today's. Okay, this is the considered as a deep pullback. This price channel is broke bottom part. Okay, let's go for today's uh, review. In starting hours, we are going for two methods. Okay, first bar close sell and opening reversal. Okay, so if first bar, which is the bear bar in today's scenario, so anyone sold here after seeing this second bar can stays in scale in below fourth, third bar, exiting somewhere here considering first position at break even and second positioning profit, whichever sold at fourth part. Okay, so second bar, which is the bull bar. Okay, if you see, uh, this is the consider as a trading range and starting day is of big bars. Okay, so uh, I also have some of the good example that this is the also same scenario that first overlapping bars are there. Okay, if you see today also same structure, overlapping bars are there and itself act as an exhauster. Okay, so if you see their buying pressure is here, only buying pressure is here, not consecutive bar, no forming channel. Okay, so itself act as an exhauster move. So what trader can do, okay, smart way to is to do opposite. Okay, if you see beer any good looking bars, big bars, let's say this is the beer bar. Okay, you can buy it. This is bull bar, you can sell it. Okay, but you have to go very small. Okay, if you consider for opening reversal trade, I will explain you. Let's go through this. If you see, this is the overlapping bar. If you see, it is two-sided mirror throughout it. This is also same example, two-sided bars. Okay, overlapping at starting and big bars. Okay, so these are all big bars. So they are not strength in that direction. Let's consider this is the bull bar. Okay, they are not forming channel or breaking below it. So today also same image in that. Okay, this bull bar, two inside bars, range bar. Okay, so today same happen, bull bar, two inside bar. So what you can do, you also see here this three and then sell off. Same structure here, same structure even also here, bull bar, inside bar, and selling continue. Okay, so this is also one example. So go through it. Okay, so okay, anyone can sold here considering trading range day because it is easy to identify. Okay, Another approach is for opening reversal. In opening reversal, we are going for first bar opposite trades. Okay, if you let me give you example. Okay, so if you see this 30th June chart, okay, so what opening reversal trade is? If anyone first strategy is to buy first close. Okay, so this is the first close, and what you have to target for at least 1:1. Okay, if you are entered here, at least target of risk reward. If you are considering trade for opening reversal, so this is the best example. After this bull bar, this move is not continued. So at 6 candle sellers got entered. Okay, they are doing for scalping and two-legged or measured move approach. So sellers got this bull here bar. First leg somewhere here, second leg somewhere here. So this is considered as the opening reversal. So opposite to the opening trend. Okay. And this is the trendy example I have seen. You can manage well. This is an example that this is the bear bar. Third bar, which is the opening reversal bull bar. So you can buy it. You have to, in this day, what you have to do is, this is the last week, okay, 28th Wednesday start. What you have to do, just scaling. Okay, your break even SL is not gonna hit. If you trade a fifth bar, just move your break even SL to somewhere here, and throughout day you are not selling that price again. Okay, so this is the opening reversal trade, reversing to the opening first bar. Okay, this is the bear bar. We are trading for bull channel. Okay, after seeing 6 bar, if you exited, okay, you go again, enter at 7 position, considering resumption is mode, resumption in channel upside. So if anyone bought second bull bar, okay, after seeing this bull bar, if they stayed in, what they can do, just scaling at 8th bar. Okay, scaling 8th bar. Okay, if you see, let's extreme scenario, anyone bought fourth high, considering price will go up. Okay, so this is the scenario. What they have to do, just scaling approach. Okay, they have to scale in here, buy one lot here, buy second lot here, and try to exit at break even position. Okay, this is the price. Okay, you consider it, you can consider it, because in trading range day there is 75% chances of uh, price will stay at the moving average. Okay, I will explain. Okay, what I'm trying to say is that if you see, let me go through square pattern first in trading range day. So breaking of, okay, let's see, this is the going to breaking. Okay, if this gonna break down, so it has only 25% probability. 75% chances is that opposite move will be triggered. Okay, so this is, if going to somewhere here, then opposite move will be triggered. It has 75% chances. So what we can do, we can trade it for 75%, or we can find uh, swing trade considering from top to bottom, or considering bottom to top. Okay, so whoever bought on second bar, put your SL to somewhere here. After green bull bar, any bull bar, you can scale in. So you scale in at 8th bar, you can scale in at 17. Okay, so somewhere here you can exit in this position. Whoever bought at lower prices can exit in profit. Okay, so third and fourth bar are not consecutive bars. This is side bars. Okay, it is confirmed that today's day will be upside bars or range trading day. Okay, so fourth bar, which is the faded by sellers, this is also faded move for buyers. Okay, anyone buyers are buying here. Okay, if you see 1 minute chart, so then this momentum from this low to continue up to this. Okay, so this is the somewhere 75 point in 10 to 15 minutes. Okay, if you not capture, no problem. Uh, you can trade very well. Okay, and in this type of day, loss have uh, you are in loss is less chances. Okay, fifth bar, sixth bar, seventh bar, fifth bar, which is the large bar. Okay, you can assume that if this type of momentum we will see, then we will stay. Sixth bar, consecutive bars, but no have strength, 50% less body. Okay, seventh bar, which lose the momentum, think of, but it is the consecutive bar. Whoever entered here after saying sixth bar can exit. Okay, or wait to scaling. Okay, or see the price at moving average. Eighth bar is the bull bar. Whoever bought here can again go scaling at eighth bar. Okay, whoever bought on second, they can exit at break even somewhere here and this position in profit. So this is considered as a black flag pattern in this selling leg. Okay, this is the considered as a pullback. Okay, this is the pullback. Ninth bar, which is the reversal from top. Okay, so uh, we can also say that buying move is continued, but sellers have faded it. Then also buyers take the move, but buyers not getting momentum, or seems they are not creating pattern for channel. Okay, so three consecutive bars, 12th bar which is not closing above this high of 11th. So looks like sellers will fade it or price will move to down, or we can see bear bar at moving average. So this is the bear bar. Whoever sold 6th or 7th can go against scaling at 13. Sellers got 4 consecutive bars and they have increase in momentum. Okay, so first leg, second leg, this is also we can consider first leg. So this is the third leg. Now if you see, pullback is also deep. Okay, if you see, so chances of two-sided. So these faded sellers move will be faded out, and price can see higher, higher prices to the midpoint. Okay, so 17th bar, which is the sort of reversal bar. Okay, so many buyers will bought around this breakout. Okay, these breakouts are buying here. Okay, buyers, what are buyers doing? They are putting limit orders somewhere below here. Okay, if you see anywhere throughout the day, this is the limit order trading approach. So 17 to 20, 4 consecutive bars, still same sort of bars. Okay, sellers have faded at 21, so this downside move is continued. Okay, they got 2 consecutive bear bars, 21, 22, same size, faded by buyers. So these also act as a buying leg. Okay, after this third leg, so buying will occur. Okay, so buying swing uh, chances are high. So this is the flag pattern. This is considered as a pullback. Okay, so 23rd, which is the bull bar. Okay, so anyone enter here on 20th or even 12th can scale in at here 12th, 20 scaling, considering SL somewhere here. Okay, because you are cool. What you think? You think that every breakout is gonna faded move. Okay, in your direction. So if you see 24th is bear bar, there is no consecutive bear bars, there is the bull bar. Okay, so it is sort of, and they are not continuing momentum to the downside. Okay, so 27th, which is triggered by 26 close. Okay, they are not moving below 22. We can consider this scenario because if you see, uh, this is the pattern. If you see, this is the first leg sellers and this is the second leg. Okay, I have also example of same. So you can buy here. If anywhere you bought here, you can also press for measured move. So this is the measured move from upside. If you see, you can scale. Okay, only scalping is to be done here. So you can buy here, exit somewhere here, or if you have bought anywhere here, you just exit break even position. 28 follow through for 27. Okay, they are not getting follow through. 30 bar, which is uh, 3 consecutive bear bars. Okay, so 32 is trying, what buyers trying to do is creating a channel to the upside, but prices are vacuum to the upside and sellers got entered. Okay, so if you see at higher prices sellers got entered, they put limit orders. So 34, 35, 36 are not forming this bull channel, so probably sellers will fade it. Okay, so 38 bar not good follow through. 39, which is the fresh breakout to the EMA, many traders will go short here, or we who traded below 32, 38. Okay, so they got triggered at 38 and 39. 40, 42, 41 and 42 are sidebars. Okay, 43, which is the considered as a follow through, but this is the sellers not great move we can consider. Okay. If you are seeing this move and just putting buying or sorry selling on big bars, okay, this is 39. What you can do, just small part you can scale here, sell here. 43 you can also sell here. Okay. Wait to for pullback. So 44, which broke above this. Okay, so this prior bar, this is the probably reversal mode, we can consider it, to this low, to this low. Whoever bought on 28 can scale in here. Okay, 44, they are not getting further consecutive bars. So very next bar, 45th are bear bar, faded almost 70% of body. So this is the also flag pattern. If you see, this is the common pattern of sellers. So first leg, second leg, they got weakened, buyers got weakened, and sellers have faded. Okay, so target is to this trend line. Okay, if you see 1, 2, 3, 4, these are the lows of bottom of the channel. Okay, so you can scale in here. 43, if you sold here, you can scale in at 50th bar. Considering we may check test lows of the today. Okay, or breakout to the breakout attempt to the low and breakout gonna pull back. So 51, 52 are consecutive bear bars. 54, which is the considered as a reversal bar, because if you see every in consecutive bars, if you see any reversal bar, price gonna reverse. Okay, so this is also same example, you can exit above it exactly 53 high. Okay, wait for the price action. Okay, buyers, buyers will do, buyers will buy from limit orders. This is the vacuum. Okay, these orders are vacuumed, or this price is vacuumed to the downside, because buyers, what will do, buyers will putting limit orders to the lower side. Okay, at the bottom. So sellers are trading at the market or stop orders, so they just got bigger and bigger price. So this is the act as the exhausted move. Okay, so all the sellers will try to exit at this, and buyers also buying here, sellers also buying here. So price is forming this type of bull pattern, bull bar. So 53 is the bull bar, buyers can buy here. Okay, who are buyers at the closes basis, bar closes basis, 5 minute, they can exit at here. Okay, 54, which is the big bar, 55, 56 are part of bull channel in this downside channel. Okay, so if you see expanding triangle is formed, so every uh, opposite players are trying to fading it. Okay, so this is the faded move by buyers. So probably if channel is not creating to the upside, okay, they are forming, tried to form channel, okay, but itself act as a big bar, and they are not getting even good big bars, bull bar. Okay, so these two are weak, considered as a weak bull bar. So sellers have dominant over here. Okay, so 58, 59, this is the bear bar, two consecutive bear bar. 60, 61, this is the inside bar. In this selling mode, you can sell it here. considering this trend line, okay, from day's high 62, 63, 64 are part of inside bar. Okay, so many sellers, what will they will do? They will put stop orders below this 59th low, 64th low. They got triggered at 65th bar. Okay, this is the itself as a largest bar in throughout day. It fell back as a exhausted move, no further continuing consecutive bars. This is the sort of two-sided bar. Bars have faded it. Okay, 67 is the reversal mode. Whoever bought this 53 or even this 57th high can go again scaling here at 67. Okay, you just scaling here. Throughout day, you don't have to much think about price will go break down, break up. You have to trust this trading range day. Your aim should be to trade only buy low and sell at high. Okay, so you can scale in at 67, 69, 70 consecutive bars, but overlapping. Okay, they got breakout at 71 bar. This is the also largest bull candle throughout the day. So this is the sort of magnet occurring here, or orders got triggered here. Okay, so sellers are putting up. There is every trade will be traded by opposite place. Okay, if you see here, their limit orders are going triggered here for sellers, and this price vacuum to the upside. So same pattern happening here, but buying. So buyers, what they are doing? So they are just buying at the buying at the buy market price. Okay, so sellers who sold here, they are losing their prices. Okay, they think for whenever breakouts go above this level, they will take control over it. Okay, so this is the idea. Okay, because if you see in larger time frame, this is also breakout faded move. This is also breakout to this point faded move. Okay, so this is also same pattern. If you see this trading range, breakout faded by bars. So same possibility of uh, opening range. Okay, if prices go above it and then faded by sellers, chances are high. Okay, they have to create channel for very upside move. Okay, to price go at least 2 to 3 to 4 hours. Okay, so they have to create channels like this. Here, if you see, this is the faded move. They are not able to create channel, so chances are high that it will be faded like this move. Okay, so 73 is the good follow through. 71, which is the bull bar. Okay, if you see 73rd, 74 are sort of inside bar at high of the day. This still price traded here. Okay, so that's it. Okay, we will see what happened tomorrow. So chances of fading is high for tomorrow if buyers unable to create any bull channel. So let's see tomorrow what happens. Let's go for one way of trade in all day structure. Okay, 20. If you see, we are trading for two approach: wedge pattern and midday approach. Okay, so in wedge pattern we are finding wedge pattern like this. This is pullback. Okay, so wedge pattern, buyers not unable to get this type of big bull bar in follow through or in consecutive bars. So at the end, sellers will fade it. Okay, this breakout to the this bear bar, breakout to this bull channel. So sellers are buying here, selling here. Sorry. Okay, so we can trade it. Okay, I have also an example. Okay, this is the wedge pattern at starting. Okay, if you see itself exhausted pattern overlapping two bars. Okay, bars are not gaining momentum. If you see at top, they are losing approach. They are not getting consecutive bars. So sellers have faded it. So we are trading at starting of the day. Okay, If you see today's chart, so this is also same pattern. This is the in micro time frame. This is also wedge pattern. 1, 2, 3 pushes are there. You can sell it here. If you consider big wedge pattern, this is also wedge pattern. You are either part of it or you can fade it. Okay, you are part of it, so you can scale in at every branch, and at the end, if you see any bull bars like this, you can exit from all your position. This is also wedge pattern. You can also participate in here, okay, because this is the expanding type, and the sellers have more chance of winning. Okay, if you see, sellers have bigger leg than buyers. In another approach, we are going for midday approach. So what we are doing in midday, so anywhere we see price at midpoint, okay, this is the midpoint from overall range. So we are considering reference to the EMA and we are buying it. Okay, if you see anywhere you bought this breakout to the EMA, can go against killing here. Their measured move is up to, this is the 50%, 0% here and 100% here. So what I meant to say, whoever buying this bull bar, okay, they have still chances of getting this. This is the risk for buyers. Okay, they are chances of 1:1 means they at least get this range to the upside. Okay, so somewhere here. So this is the breakout to the range. This is the bear move. Price stuck at midpoint. Okay, so sellers got exhausted and buyers faded it. Okay, so you can buy it here if you have anywhere bought here and just try to exit at break even position. I have also another example. Okay, this is also same pattern. You can trade breakout to the EMA. Okay, this is same example. Bears wedge at starting, buyers have faded it, price reached to the midpoint. This is the signal for EMA gap breakout to the bar. Okay, mid day price breakout. They form channel and channel is formed. This is the great bull day. Okay, if you see in today's time frame midday approach, we can trade it for this breakout bars considering scalping only. Okay, if you see, this is also price vacuum to the midpoint, this overall range, so we can trade it for scalping and also swing approach. If you got entered here, what you have to do is just think for swing trade. Okay, you can scale in here, you can exit here or even exit here. Okay, so you can trade as a scalping. Okay, but if you manage well and aim for swing trade, you aim for swing trade. Okay, so chances of getting higher prices is high. Okay, if you scalp is at this bull bear bar, you just get out at this. Okay, this is scalping. In swing trading, what you can do, you just ride this throughout all parts and you can book somewhere here, even here. Okay, this is the part of swing trade. So if you see this forming channel pattern and you are well recognized to this pattern, so you can swing it. Okay, for at least 1 hour, 2 hours. If you see, move started from 12 o'clock to uh, somewhere 14:45, so almost 2:30 or 2:15 minutes. Okay, 2 hour and 15 minutes. So this is also considered as a swing trade. Okay, I have also another patterns, two pattern I brought here. Two, these are the big bars at starting. So created wedge pattern. Buyers have faded it. Okay, overlapping bars are there. So first, second, third puts are there. Buyers have faded it. They able to get channel to here. So anywhere bought here, you can scale in here and exit somewhere here. After three puts, sellers have faded it. This is the midpoint vacuum. Okay, EMA gap. So whoever bought here can again go scale in here. Okay, who bought here this pull bar can go scale in here and exit at the high of the day. Okay, this is they created again bull channel. So this is also same chart. This act as a exhausted move vacuum to the upside, downside, upside, downside, overlapping bars. You can trade for opposite to it. Okay, if you see this bear bar, you can buy it. If you see this bear bar, you can buy it. You have to consider very large SL. Okay, up for upside SL, you just put somewhere here, because if breakout is gonna happen, so chances high that it will be faded, but that breakout can't get your stop loss hit. Okay, if you see, you just put your stop loss here. Okay, so this breakout will take out your stop loss. So what you do, just put stop loss very big and aim for scaling. Let's say if you are entered here, okay, you got, after seeing this bull channel, you got stuck or you dismounted. What you can do after seeing this top of the channel, okay, you either enter. Okay, this is the bear bar, you can enter here. You just remove position here. Well, okay, if you not remove, exited, you just scale in after this bear bar. Okay, and whoever sold here, they can do scaling here. Okay, and part of this bear move. Okay, here also large bear and bull bars are there. This is also good range day. If you see, today is also much range are happening. Okay, so this is the almost, if you see 90 to 40, this is the 60 to 70 point expanding triangle. From bottom, if you consider, if you bought this part and somewhere exited here, this is also 60 move within 15 minutes upside move. Okay, so what in future you can do, you have to just take care. You have to find the way that you can structure out how days are forming, how any channels are forming. So if you got uh, uh, entered anywhere here, okay, anywhere this part, and you are remembering that channel is going to be like this, so you can stay in position for a long time and you can make it to get big profit. Okay, okay, so that's it guys. Okay, thank you.